Good day, ladies and gentlemen. I am Anna for WSD Global Markets New Zealand. Here is the market commentary for April 2010. Let's start with the metals. Precious metals look to be at a crossroad tied up between dollar appreciation and equity index bull run, with gold trading in a range of 1080 to 1140. Monthly close above 1090 will be bullish. We heard of the North Korean situation, just decided not to wait for the technical level. Looking at the energy market, oil, subdued demand is likely to keep oil trading in a target range of $65 to 85. Supply and demand dynamics are slowly improving, as are global growth prospects. As such, the targeted range is raised for oil from $60 to 80 per barrel to $65 to 85 due to cyclical improvements. Risks to our view include a sharp fall in the US dollar or an unexpected disruption to supply. Currencies. US dollar. US dollar maintains neutral to bullish view given uncertainty on growth outlook. Although the US Fed raised the discount rate in February, we retain the view that it will err on the side of caution in tightening monetary policy. We maintain a neutral to bullish view on the US dollar given the uncertainties surrounding the macroeconomics outlook and that the major currencies are very comparable in terms of fundamentals. In particular, they all offer very low yields on cash and whether the US dollar inverse link with the risk trade is still in place. Although we must know that this bull move is from weakness of other majors rather than the US dollar strength. Euro. Resolution of Greece debt issues will be a major swing factor in the short term. With inflation contained and growth still patchy, official interest rates will be kept low for a protracted period of time. In the short term, currency movements are likely to be driven by news flow around the Greek fiscal situation. We continue to have some conviction on longer-term weakening of the euro against the Great British Pound. However, the shorter-term picture is unclear. The sterling, Great British Pound. Short-term volatility likely given UK political uncertainty and the debt issue of peripheral Eurozone governments. We retain the view that an underweight Great British Pound position against the euro is justified by the UK's fiscal position, which is weaker than that of the major Eurozone countries. However, both the Great British Pound and the euro could be subjected to short-term volatility given the political uncertainty in the UK and the fiscal difficulties of the peripheral Eurozone countries. Let's take a look at the Japanese yen. Potential for volatility is high. It is probably safe to assume that the authorities continue to hold the view that excessive Japanese yen strength is not desirable for the Japanese economy. Nevertheless, there has been no market invention or even any recent comments to this effect. As a result, the potential for volatility remains high. The Australian dollar. Choppier price actions in the currency is expected. With encouraging outcomes in the domestic economic data, the RBA lifted its policy rate in early March for the fourth time in the cycle. The RBA's tightening bias supported the currency performance. However, China's slowdown will continue to be the headwind. This was our market commentary for the month of April 2010. I am Anna for WSD Global Markets New Zealand. Don't forget, we have a great contest this April 2010. Just sign in for a free demo account and win exciting cash prizes. May the best man win. Good trading. See you next time.